Welcome back to the Open. Earnings season is now well underway in the U.S. Among others, major banks have reported earnings. Our next guest believes it could indicate that some pent-up demand for equity issuance could lead to better days ahead. Let's bring in Lesley Marks. She's Chief Investment Officer at Mackenzie Investments. Thank you for coming in.
Good morning, Paul.
So most of the big U.S. banks have reported results. Yesterday, they all rallied, it seemed, on news, even some uneven results. Today, Goldman Sachs may be an outlier. It's reported a big decline in profit. That was expected. What's your take at a high level on these U.S. bank results?
Well, I think the most important thing is when you hear the results or the numbers, that's really a look back. What we're really focused on as equity investors is the look forward. And one of the key, I don't know if you would call it a data point, but narratives was what we heard from Morgan Stanley CEO James Gorman yesterday about almost sort of indicating green shoots in the equity issuance, which is great for most of these large U.S. banks, Goldman Sachs especially. Morgan Stanley obviously has an offset with its wealth management business, but given the strength that we've seen in equity markets, particularly in the U.S., that's going to be great for future profitability in the wealth management side.
Some of the regionals reported results yesterday, and they rose as well, but they are very different institutions, aren't they, than the big Wall Street money center banks?
That's right. I mean, people were really looking to see deposit trends, and we're starting to see a little bit of an uptick in deposit trends with the regional banks, which means people are feeling more comfortable leaving their deposits with the regional banks. Now, of course, that has come at a bit of a cost. They've had to pay higher rates to attract deposits. And so the outlook maybe isn't as good. But if someone is looking to be a bit contrarian or look for the best value in the sector, the regional banks would be an opportunity as well. But if you're looking for stability, stick with the large banks. As I said, Morgan Stanley showed an interesting trend and commentary around the future and this idea of pent-up demand for issuance because the last 12 months have been very weak for issuance.
So we're getting to near the end of the bank reporting results, but we're just getting into the beginning of S&P 500 reporting season at large. What are you expecting? I'm hearing a lot of people in your world saying we expect many companies to beat reduced expectations.
Well, I think that we've had a very narrow market, right? So 7 stocks have driven the S&P 500, and we're going to hear from most of those stocks over the next 7 days. So this is going to be a really a key time to think about how the market is going to perform because it is really about expectations and the future. And that's what we're going to hear from all of these big heavyweight companies. Generally, these companies have the amazing talent to sort of underpromise and overdeliver. Some of these larger companies, they've been very prudent around their staffing levels, which we've seen more so over the last 12 months than certainly the previous 24 months. And so we think that earnings will probably come in overall okay in that group.
What are your thoughts on tech, which was clearly the leading group in the first half of the year?
So tech has become almost like the new defensive or the old defensive, if you will, because there is this great secular trend of AI that's been really driving technology shares. Now, we're paying for that, high valuations, but typically valuations don't dictate how stocks are going to perform over the short term. So I think investors will continue to turn away from the higher valuations of the technology sector if the earnings come through. So I think that technology will end up playing a bit of a defensive role here if we see a choppier time in the market overall. Well,
do you have any thoughts on Microsoft in particular? It rose in a big way yesterday because it announced pricing on its new AI-related software.
I think that Microsoft is a great example of benefiting from the secular trend in AI. And so here, we don't really see that ending in the near term. We think that's a really important trend. And so Microsoft will continue to benefit. And it's an incredible success story and certainly has been well positioned in the current secular trend.
Canadian stocks, can they do better in the second half than they did in the first half?
Well, Canadian stocks would be the valuation play or, again, another contrarian play. In Canada, our focus when we look at Canadian stocks, of course, is energy and the banks. We've seen some firming in energy prices, which is good for Canadian stocks, certainly the Canadian energy sector. And in August, we will see the Canadian banks report. If the Canadian banks are disappointing, I think that's going to be a pretty significant headwind for Canadian equities overall. But never count out the Canadian banks. They do tend to perform very well over the long term, and expectations are extremely low. So that would be an example where expectations are so low that you could see some outperformance from the earnings of Canadian banks.
One thing we should see fairly soon is Canadian bank analysts summarizing the U.S. bank results and indicating what takeaways, if any, there may be for the Canadian banks, which because of the reporting schedule report after the U.S. banks. Do you think there are any takeaways in these U.S. bank numbers that may indicate what we may see from some of the Canadian banks?
Well, I think there's two takeaways. One is, as I mentioned, on the wealth management side, most of the Canadian banks have significant exposure to wealth management. So rising equity markets are good for wealth management. And then the second takeaway is the pent-up demand for issuance. We've had the same trend here in Canada, virtually no equity issuance. Eventually, companies do need to issue equity if they want to continue to grow, or there's reasons why Canadian companies will be issuing equity. And so that same indication of pent-up demand in the U.S. has got to find its way here in Canada.
Okay, lastly, how are your portfolios composed right now?
Well, we've been more cautious on the equity markets overall. Our view is that although we're seeing what looks like close to the end of the tightening cycle, that would be generally good for bonds. Rates have started to roll over. Inflation is starting to come into the levels where it's starting to look more interesting in the sense of coming to the end of the tightening cycle for the major central bankers. But on the other hand, on the equity side, an economic slowdown, which we expect to see closer to the end of this year, will be a headwind for equities.
Thank you.